The 100-year-old Yellow trucking company, familiar to generations of road-tripping Americans everywhere, went bust last week, despite a $700 million taxpayer bailout and throwing 30,000 mostly blue-collar workers out of a job. What put Yellow down was a three-punch from government mandates, sophisticated financial engineers, and old-fashioned Teamsters. And more are coming. I mentioned in a recent video how the worst inflation in 50 years is finally trickling down to workers, kicking off eye-watering wage demands from unions. The Teamsters were demanding from Yellow a $20,000 pay hike while blocking the company's efforts to reduce costs, to keep more people on the payroll. They knew Yellow could not pay. Yellow was just this side of solvent, with a debt totaling $1.5 billion, or 57 times their annual profit. But the Teamsters appear to have made a strategic decision to kill the company, to mount it on the wall as a warning to the bigger negotiations to come. The parasite killing the host to warn the rest. So Yellow will not be the last. In another recent video, I mentioned that hundreds of thousands of union workers are on the edge of striking, meaning this existential game of chicken is just beginning. The United Auto Workers just issued a 46% hike to the big three automakers that reads more like a hostage negotiation. United Airlines just agreed to a 40% hike. Rail workers got 24%. Even the post office, which cannot strike, still snagged $6,000 a year. Biden's inflation is going to keep disrupting and hitting especially manufacturers, emboldening unions that have spent decades turning swaths of America into Rust Belt, with an invaluable assist from governments laying impossible regulations and mandates, especially on manufacturing, and financiers who drain out the company before the union does it for them. For decades now, thousands of manufacturers could not survive all that. Already, millions of manufacturing jobs have been wiped out, bringing total manufacturing employment from 22% of workers in 1979 to just 8% today. Those companies who have survived this gauntlet are now pinched between debt, regulators, and unions looking for payback for 3 years of inflation, all competing to fleece what's left of American manufacturing. So what happens next? The companies that can handle the unions that have pricing power will pass the costs on to customers. So expect to pay thousands more for cars, expect cheap flights to evaporate. But many companies won't be able to handle the pay hikes, and they will slip under the water, their business gobbled up by the big guys or by China. Many of those, like Yellow, which was founded in 1929, the eve of the Depression, many of those will be multi-generation businesses, legacies of that age before politicians, financiers, and unions salted the earth for American manufacturing. Once they're gone, they will stay gone. Okay, we'll be watching. See you next time.